morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures. This is the daily chart, and essentially, we have round-tripped from 2122 to 2112 back to 2122, and we've traded back down as low as 17.25 from there. So 22 is proving to be a pretty important level, and that's the first level that I'm looking at in the regular session to see if it continues to hold up as resistance. You've got the weekly pivot just above at 21.24 half. From a bullish perspective, what's important is that despite these pushes down into the 12-13 area, even as low as 10 half rather, you are seeing the middle band hold up as support consistently since the move back over. See it here, and you see it here. So while the bulls didn't get the follow through that a lot of them were looking for yesterday in order to break above the prior day high, break above weekly pivot, and to start to go to work on the all-time high up at 2134, they definitely got the job done, they being the bulls. Bulls definitely got the job done on the downside in starting to establish support. And they can build on that if they hold that support today. So that would be 2112. And they can build on that into next week. So as we close out the week and close out the month, it basically puts the S&P in a position on the futures where you've done upper band, you've done a pullback to the mid band that overshot to the 50-day exponential moving average, took back the middle band, and then is establishing the middle band as a higher low of support versus the 50-day exponential moving average. All of these are bullish developments. What you need to see now, especially as we head into the beginning part of next week, is the follow-through part. Bulls need to follow through. They need to get up to 2134 through it and start to engage the upper band. If they're unable to do so, especially if they're unable to get back over 2127 and you break below the 50-day exponential moving average, what's going to be left is a pronounced lower high on the daily chart versus 2134. And in a worst case scenario for the bears, you would have 2134, 2132, 2127, and then some other nondescript high, whether that's 22 and change or whatever it is. It cannot, if you're a bull, you cannot allow the 50-day exponential moving average to be lost. And especially the price level at which it bounced at 2096. If that happens, then you will see the lower band magnetize, meaning it'll be an attractor for price, and you'll see lower prices from there. So we'll see how this plays out today in the next week. All right, everybody have a great day. Have a fantastic weekend. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Check out the chat room. Come on in. Next week is a new week. It is a new month. Come on in. We got a lot of new people starting. It's a fantastic time to come in and learn right along with them. We've got live chart, we've got audio, we've got the chat room, we've got evening, the subscriber webcast, which is a lot more detailed than what I do in the morning. We've got numbers that come out at night, resistance tables, pivots, some proprietary stuff that we share with our members, and weekly charting webinars with Spring Heel Jack and Stan Nabosny that are fantastic. And we would love to meet you. If you trade this stuff all the time, don't trade it alone. And if you want to find a place with a really solid group of traders that I'm just honored to work with every day, come check us out and see if we can help you. All right. Have a great day. Trade them well, everybody.